Debtors turnover ratio, how it is computed, let's see the technique. Look at here, you have total sales of 1 lakh, of that cash sales is 20,000, and you have this information, the debtors are 6,000 and bills receivable is 2,000. You have to find out the debtors turnover ratio. So we know total sales is 1 lakh, of that cash sales is 20,000. It means balance is supposed to be the credit sales, that is 80,000. But of this 80,000, some of the customers are still yet to make payment, that is there are debtors of 6,000, and some of the customers who have purchased on credit have given bills, so the bills receivable is 2,000. So of the credit sales of 80,000, 6 plus 2, 8,000 is the average debtors. So now we can calculate the debtors turnover ratio, that is ACS, which is annual credit sales 80,000 divided by average debtors of 8,000. So generally we calculate average debtors as opening debtors plus closing debtors by 2. So in this case, since we don't have those kind of information, I'm assuming this is the average debtor. So 80,000 divided by 8,000, it means you get the value as 10 times. So what does that mean? The debtors are rotated 10 times. That indicates a faster collection, because higher the debtors turnover ratio, faster the collection. That is the understanding. And once we have the debtor turnover ratio, it is also easy to find out the debtors collection period. How many months are in a year? 12 months. What is the debtors turnover ratio? It is 10 times. So if you divide 12 by 10, you get a value, and that is nothing but the debtors collection period. Look at here, debtors collection period is equal to number of months in a year divided by debtors turnover ratio. It means 12 by 10, you get 1.2. It means whatever the credit sales they are making, they are collecting within 1.2 months, and that is good. Here we go, Credit and Financial Analysis Mastery course. It's a comprehensive pre-recorded online course that comes with 15 modules of video lectures, basically 70 plus hours of video contents, multiple ebooks and reading materials related to credit and financial analysis that will make up another 30 plus hours of content. So totally it is 100 plus hours of learning resources. Then you will also get access to a private community in Telegram for clarifying your doubts in credit and financial domain. Then you also have the flexibility to choose 1-year subscription or lifetime subscription depending upon your learning goals. So by joining this course, you will learn basics of credit analysis, how to read balance sheet, financial ratio analysis, cash flow, fund flow analysis, how to arrive at credit risk rating, how to prepare CMA report, cash budget, how to assess credit facilities like CC, OD, LC, BG, term loan, how to write bank loan proposal, and you will also have access to case studies related to credit analysis. So to join this course, to know more about the course, comment CFA, and I'll share the details with you.